I think that right now the SEC has an initiative to bring crypto exchanges into regulatory compliance. And I think as those exchanges start to register with the SEC, that'll be a big deal and a big milestone forward. I think that that'll open up the path and the door for Bitcoin spot ETFs, and that'll be a big deal. And I think as we see more guidance coming from the FDIC and the Treasury on how banks can custody Bitcoin, I think that'll be a big deal. So I think those milestones are all ahead of us, but I think we can expect them all to come in time, and the writing is on the wall. So as each of those takes place, then I think you'll see more and more corporations adopting Bitcoin as a treasury asset.
Long-term Bitcoin holders are continuing to add to their Bitcoin holdings despite BTC trading at a slight premium. Meanwhile, the CoinDesk Bitcoin Trend Indicator, BTI, is showing that the asset is in the middle of a significant uptrend. Hello and welcome to Money Talks. In today's video, co-founder and executive chairman of MicroStrategy, Michael Saylor, updates us about his Bitcoin adoption strategy for his company MicroStrategy, and if it is a winning strategy or not. Also, he shared his beliefs about the future of Bitcoin adoption in 2023 and the benefits of regulations.
The first CEO of a publicly listed company that put Bitcoin on the balance sheet. Was it a winning strategy?
Yeah, it's worked out really, really well for us. Since we started, our enterprise market value has gone from about $600 million to more than $6 billion. So we've 10x the enterprise value of the company. If we trace our performance back to August of 2020 when we adopted a Bitcoin strategy, Bitcoin's been the number one performing asset of all the possible treasury assets. If you contrast it to the S&P index or NASDAQ or gold or silver or bonds, you couldn't have done better than to have selected Bitcoin. And MicroStrategy's stock has actually outperformed Bitcoin as of just a few days ago. So I think Bitcoin was up like 140%, and MicroStrategy is up a bit more than that. So I would say it's definitely been a winning treasury strategy. And maybe more to the point, our choice was we either sit in sovereign debt. We could have held a bunch of treasury bonds, and they were yielding 1%, 2%, 0% for a while. Right now, the 30-year Treasury bond is yielding 3.6%. We could have done that, but of course, that's not really compelling for public company investors. Nobody wants to invest in a company that's holding tons of cash or tons of Treasury bonds because, from their point of view, cash is never going to outperform the S&P index, at least they don't expect it to. And they could own treasury bonds themselves. So by us adopting Bitcoin, we were able to tap into an asset which has been appreciating it in excess of 50% for the past 3 years. And 50% is better than 3%.
Long-term holders' 30-day change in Bitcoin supply has been trending higher since March 31st. Long-term supply is defined as coins that investors have been holding for 155 days or more. As these investors are often less likely to spend older coins, an increase in the metric reflects dormant supply as well as the bullish sentiment. The uptick is occurring as Bitcoin prices have flattened over the identical period, implying that Bitcoin holders view the recent pause in price movement as an opportunity to acquire more. Year-to-date, Bitcoin prices are up 68%. On-chain data shows a trader paid over 64 Ether, ETH, in fees on Monday to get 84 Ether worth of 4, a newly issued meme token on the Ethereum blockchain, likely based on the crypto Twitter meme of 4. This means that the trader spent over $120,000 to get $156,000 worth of 4 tokens. However, some sleuths pointed out that the trader was only the second entity to buy 4 and is now sitting on an unrealized profit of nearly $240,000. As such, further on-chain data shows the top early 4 buyers are sitting on profits of $240,000 to $2 million, suggesting why traders were ready to pay outrageously large amounts in fees to purchase the tokens. The current hotball of money in crypto is hunting for jokes instead of fundamental plays, which has contributed toward extremely large gas fees on the Ethereum blockchain.
I think the good news there is Bitcoin is ready for it. In order to be the open, permissionless, ethical protocol for monetary transactions on a global basis, you need to be a commodity, an asset without an issuer. And that's what Bitcoin is, due to the legacy of Satoshi. But if you want to be technically sound, you need to be an extremely well-engineered, decentralized protocol. And so Bitcoin is extraordinarily well-engineered with that stable block size capped at the 4 megabytes at the 10-minute block frequency has proven to be very stable. The extremely decentralized node network and the extremely well-developed Bitcoin mining network creates a very, very stable, sound base to run a digital monetary network. $20 billion or more has been invested just in the hardware that runs the Bitcoin mining network, and it has had 14 years to diffuse, to mature. It's gone through its growing pains. The block size wars were important growing pains. All of the generations of ASIC miners, from first the CPUs, then GPUs, then the early ASICs, then the second generation, then the third generation, now the fourth generation or more. All of those things were important to making it the technically sound base. And then finally, you need the economically sound basis for that global monetary network. And the economically sound basis was delivered to us via Satoshi's protocol when Satoshi capped the amount of Bitcoin at 21 million and gave us this beautiful halving protocol of cutting the block rewards in half every 4 years, right? And that last piece can't be understated, because you can theoretically create a digital commodity, a Dogecoin, if it was theoretically decentralized, or some other cryptocurrency. But if you don't cap it at 21 million, and if you're not sure that it's truly decentralized and no one can ever break that cap, what you've got is a digital commodity which is going to increase in supply from time to time, like Dogecoin increases in supply. You don't have digital scarcity. And a digital commodity is better than an analog commodity. I would rather have $1 billion of a digital oil than $1 billion of oil. But a digital scarcity is better than a digital commodity, because what I'd really rather have is something... I don't want digital gold. I want digital gold where you can't make any more gold ever, right? And gold isn't that. You can find infinite gold in the universe. So I want something which is not digital gold. I want a digital sequentially numbered 21 million gold coins and no more forever.
So, is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.